Okay, let's do this. Week 26, Outlook number 2. A couple of housekeeping things. I mentioned in the previous Outlook that I will be removing some of the, you know, inactive pairs that I don't really trade. So the primary ones that I will be looking at moving forward will be the British Pound Futures, which is effectively GU, gold futures, which I'm kind of not trading, but I'm gonna keep it on here just for kicks and giggles. I may remove it here in the future. So that's probably like a secondary one, but the primary one are British Pound futures, Nasdaq E-mini futures, and also the E-mini Dow Jones futures. Um, that's pretty much it. So those are the only pairs that I'm looking at for the perceivable future. Now, another thing, I will be continuing on the outlooks for the entire calendar year, and then after that, I will no longer be doing them in the public space, right? So this is more of a get ready, learn as much as you can. These videos will always be up on my channel, but after 2026, I'm going to be moving back into the shadows of the trading world. Okay, so let's start out with the British Pound futures. In the previous Outlook, we mentioned that we had two scenarios playing out, and boy, was I wrong about the scenario here. I effectively just chalked that up to hallucination, right? I saw something inside of this wick. It gave like a very, very, like on a 1 minute time frame response. It didn't even give like a really valid response, which makes sense because this is, I hallucinated the entire scenario. Even though this is action mitigation, this action of mitigation was the one that was valid, and that led to actually what is important now, the clearing of the 4 hour range. So we are no longer in a range on GU or on pound futures. We have actually shifted into a bearish run. And why do I say we shift into a bearish run? Because we have performed a break of structure. So now, because we performed a break of structure, like I said, we're in the bearish run. So I'm going to get rid of this. This right here, I'll leave it on, but it's not really relevant to me anymore. Neither is this break of structure, neither is this liquidity draw, and neither is this line here. The one thing that is important to me, and neither is this, what is important to me is the fact that we do have this action mitigation that led to the break of structure, and then I have an area of interest marked up, which is basically the area of interest that follows the action and mitigation. So this is the area of interest that I'm looking to capture opportunities off of to continue the sells lower. Now, the immediate target that we would be looking for is the next liquidity point. Well, that next liquidity point showing up on the futures chart is actually this week. This is a low. But the primary ones, which we were talked about very early on and had been tracking before we even got in this range, which is looks like this range was just a stall for the last few months of price action in order to set up the trades for us to start moving towards our original target. So if you guys remember, if you watch the early outlooks now, wow, it's crazy to say that, but we had already identified that our main target was 1.2716, or really I should say this liquidity point here because the chart does shift around a little bit from time to time as future contracts roll over. But this liquidity point was our main target, and all of this ranging price action was just a detour, um, to give more to basically generate a lot more liquidity to send price to that target. And so that's the idea that I've had, the basically the long term and the macro idea that I have in mind this entire time. So now I'm looking for that to continue to play out here now, but we'll see what happens. Now, one of the things, if you're looking at this chart in this area, you'll be like, hey, Brendan, why aren't you looking at this price gap here? Well, remember, we're looking for areas of interest that follow the action of mitigation. There is no action of mitigation in this area. There is no sponsor candle. There is no price gap that's mitigated that leads to the creation of this. This is just a price gap. This is just inefficiency, I'll say. There's nothing relevant to me about it. This one is relevant because we have that action and mitigation, because we have that balancing of the price gap here, and then that leads to the run on this low and then the range low, and that generated, before we ran that range low, we generated this price gap here. So this price gap here to me is a valid area of interest in which I would look for opportunities. and then looking for price to aim towards this target and then continue lower. So this may be the swing opportunity that I'm looking for on on pound futures. All right. So like I said, to recap, a lot of jargon, a lot of words there. We are transition phase from a bullish range into a bearish run. We are continuing on with the program, looking for price to target these next liquidity points and previous structural points from the bullish run in the first place, with the ultimate goal of targeting this liquidity point here. All right. So that's what we have on the pound futures. Gold, as expected, as analyzed, it finally broke out of the range. And which way did it break out? It broke out to the low side, which was expected, which I talked about in multiple outlooks. So now that we are no longer in a range, gold is in a bearish run phase now in the market. So we should be expecting, if there is any pullback to mitigate any sort of inefficient pricing area of interest, and then continuing lower to start targeting these liquidity points, and then we'll assess the price action accordingly. But as of right now, there's nothing important to me to trade on gold. The only reference that we have right now is the fact that we did just mitigate this structural point, or we purged the structural point slash liquidity point slash range low. And like I said before, we had basically equal lows created, and that's always indication that price is moving towards that area. Not exact science, but it's an observation that is turning out to be true more often than not. There is, however, if I am looking at this right now, we do see that we have, once again, this action and mitigation here. And so any price gap or sponsor candle that's created afterwards will be a valid area of interest in order to frame up trade setups. Ugh, why do I keep doing this? Like so. So this is the area of interest. We see 50% was mitigated, and that led to the run on the lows. So now we should be expecting, or not expecting, if price adheres to the principles of balancing price action, we should be looking for price to pull back to mitigate any areas of interest that are left unmitigated if it decides to finally begin the pullback phase here inside of this run, in this short run here. So I would be inclined to look for price to pull back to, let's say, maybe this price gap there, maybe the one just below it. And I'm just extending this to show like the different price gaps. This is balanced. This is possible, but I don't really like this one. I'd rather price pull back to one of these two. And it's up to just for price to do that. So that's what I'm looking for on gold. All right, on to the NASDAQ. Well, as once again, as analyzed, we did not take out the high. We actually performed a break of structure, solidifying the, well, honestly, it's basically just ranging right now. But effectively, we ran this low here. We broke structure, and then we ran this low here, which we discussed in the previous outlook. And then we also said that if price were to come back into the discount, we would want to see it run some sort of price or inefficiency, and that is exactly what it is responding from currently. If it were to come back into the discount side, and it mitigated it perfectly, we have a perfect response from 50%, or close to perfect response from 50% of this inefficiency. And now, if price is going to hold, we'll see the next couple of candles form to generate some sort of inefficient pricing, and then look for opportunities to take price higher. If price does not hold, then one thing that I am looking at, which is very subtle, if this is just, opportunity for price to pull up here, very subtle, is if this price leg is failing right now because we have indication that there is liquidity at these lows, the counter analysis is that there is an action and mitigation here. Very, very subtle. Very, very subtle, but it is nonetheless. We have a price gap or an area, or not, we have inefficiency that was mitigated. And so now if price is going to return higher and to return higher for opportunities to sell, then I would be looking for price to return to this area of interest here, which is the price gap generated following the action mitigation. And then I'd be looking for price action mitigation of 50% or to 100% to send us lower, specifically towards this structural point and purging the liquidity at these equal lows. That's what I'd be seeing on the counter analysis. I am unfortunately inclined to look at the counter analysis based off of the momentum in the price action here. There's nothing holding up this action and mitigation. This is just an action and mitigation, so there's no real structure supporting this move to me. There is structure supporting these sells, and there's a lot more story here and a lot more evidence and data showing or leading us to believe that sells will still be in play here because we have an action mitigation, we have a break of structure. So that's two actions versus we have three actions actually: break of structure here, break of structure here. Then we have the action and mitigation here. So that's three actions versus one actions, which is just the action and mitigation here. So do the balancing act here. We have three action versus one action. I would err on the side of numbers here and say that price will most likely pull back to this area of interest and then give the real move, which will be a sell towards these lows, towards this structural point here. But this is all counter analysis. I'm erring on the side of the counter analysis, but the pro trend analysis is the fact that we still are in a bullish run. So if you're pro trend, just target the all-time high. Not financial advice. All right, or investment advice. All right, so now moving on to the Dow Jones. So Dow Jones is doing something a little bit different. We've decided to actually continue mitigation of or test this basically. I don't know. Do I want to call it area of interest? No, this is just action mitigation. We tested this multiple times now, and we're just testing this area. There's nothing really supporting this to me. This was the area of interest that I would have looked for, and we see that it did give a slight response, but it ultimately ended up failing. And then we decided to actually perform a liquidity draw of this low here. So that is the action that ended up occurring because after we performed this action mitigation here, that generated the area of interest. That area of interest had a response, but ultimately failed, and that failure led to price running this low that it generated here, and that performed a liquidity draw. And because we performed the liquidity draw, following the liquidity draw, we have the price action that's leading to taking out these highs, in which we nearly tested the all-time high yet again. But we did actually perform a liquidity draw of this high, and we're looking to see if this liquidity draw sustains, or is this just a purge and then the price action will continue moving higher. Erring on the side of pro trend for this particular pair, I would be inclined to see that, or to say that price is looking to take out the all-time high again, and then we'll have to assess the action that occurs here. If it's a liquidity draw, then that will lead us to sells. If it's a break of structure, then obviously look for continuation of the trend. But as of right now, we have that mitigated. This is no longer relevant. That's no longer relevant. This is the action that is relevant. We basically have a liquidity draw here, and so we should be looking for price to continue higher if this liquidity draw here does not hold. Other than that, that is it for week 26, outlook number 2. We are halfway through the year. I hope everyone's making progress, as much as progress as I am making. Let's finish this year strong. Peace.